Hello, everybody, and welcome to a housing market update here in Southern California that is just for first-time home buyers. So what we're doing today is we're talking about that entry-level end of the market. So if you watch our videos, you know we do a regular whole housing market update here in Southern California, and then as well as an entry-level market. So I want to go ahead and get right into it because I think it's important to kind of talk about what's going on. We have a bit of a different market, and I think if you're looking at the title, you might think that this is more clickbait, but everything points to me that we're going to have a late spring, but that it is going to be a pretty busy spring. So let's go ahead, let's get started. So first off, we're talking about the closed prices of homes, and you're going to see that condos have rebounded as well as that entry level single family home. Now, our stats are for LA and Orange counties, and we define the entry level into the market for our condos. That is a 2-bedroom, 2-bath at the first quartile. So, what is a quartile? A quartile is if you took the median as halfway between the cheapest and the most expensive. A quartile is halfway between the cheapest and the median. So it's that first quarter, and that approximates that entry level into the market. For our entry level single family home, we take a 3-bedroom, 2-bath detached property and we do the same measurement, that first quartile. So if we're looking at this, where are things right now? Well, guess what? That if you're looking at that entry level single family home, that price has gone back above $800,000 here across LA and Orange counties. And if you're looking at that entry level condo, you're right around $550,000, representing a bit of a return and run back up. I think our low point in that one was $505,000 back in January. Now, remember, this data is 30 to 60 days old because it's based on closed stats. We do not have pricing information on properties that are currently in escrow. If we go to our total monthly payment, I think that tells another little bit of a story. Yes, there have been some rate increases that have happened, probably, gosh, in the last week or so, but we're still looking at a spot that, frankly, is pretty good for buyers. And I think they're finally starting to realize this. So that total monthly payment on that entry level home, even at 5% down, including mortgage insurance and taxes and insurance and the HOA fee and all that kind of stuff, you're still just above $6,200 for that entry level single family home, and basically just above $4,100 for that entry level condo. So the reality is those numbers, especially when we compare them to where we were last year, right? If we were looking back at where we were last year, we were about $100 a month higher on the single family side of things, and we were about $300 or so higher on that condo side of things. So the reality is, if you're a buyer, even though it feels like things are heating up, and I actually think they are, you're still in a better spot than you were at last year. If we look at our total minimum household income required, I think that's another interesting gauge, right? What is the minimum amount of income that you would need in order to afford one of these homes? And so on that single family side, that $825,000 or so home, you're looking at around $153,000 of household income, provided you have no other debt. So that's kind of a minimum level, right? 153. And on the condo side of things, you're at $102,000 of minimum household monthly income. So remember, that's household. That could be one person, that could be two people, that could even be three people. If we look at our absorption rate, this is the number that I think might be a little misleading right now. For our entry-level single-family homes, you'll see that it has dropped to 68%. That's actually not super far off where we were last year at 74% this time. And if you look at our condo, that is at 57%, which is still, I would say, tilted a little bit in favor of buyers on both of those figures, though, very, very close on those single family homes. For condos, we're at 59%. So largely the same, not really seeing much of a difference there. If we look at our total inventory, I think this is the one that tells me a little bit about what kind of year I think we're going to have. You'll see that that condo inventory is up versus last year. And I think there's a couple reasons for that. I think we're looking at around 2,200 active units versus last year at this time, we were at maybe 1,850 units. I think what you're seeing is you're finally seeing a lot of move up activity. These are sellers that are putting their homes on the market because they are planning on buying another property. And there's a couple reasons for that. I think that, we're seeing the rates, while the last week or so have gone up a little bit, I think you're reaching a breaking point, right? You've got sellers who maybe bought that condo when they had one child, no children, and now they're facing a different family situation and they're busting at the seams, and they've kind of waited as long as they're going to wait. Now, on that entry level single family home side, we do see those going up, but largely that inventory is the same as last year. And that tells me something. If we see more condo buyers are trying to move, or condo owners are trying to move into homes, but we're not seeing that many more homes on the market, especially for those entry level single family homes, it doesn't take a genius to figure out that we're going to see some upward pressure on the prices. If we look at our 14-day still active percentage, this is an interesting graph because I find sometimes this tells you a little bit more about where demand is and how competitive it is. Lower numbers here mean a more competitive market. So when I look at this, I see that we are about the same as where we were last year, but both of these graphs are pointing downward, indicating that both of these markets have actually gotten more competitive in the last month or two than they were towards the end of the year. And both of them are more competitive than they were at almost any point last year. So take note of that. I think that's really kind of your canary in the coal mine, right? That is what's telling you that something is kind of going on in this space. So definitely take a look at that. Finally, I want to talk about our weak supply of homes. This is the other one that tells me about market velocity. So while the total amount of inventory just tells us the number of units, that's a very static face value amount, right? Like it is what it is. But the weak supply of homes tells us something that I think is just as important, maybe even a little bit more important in a market like this. And that is, if nothing new came on the market, how much time would we have before we ran out of houses, or what is the relative inventory that we have? And if you look at that number, you can see that number has been dropping steadily for our single family homes. We're just at 7.24. That's only a little bit better than it was at this point last year. And if you look at that condo number, that has really taken a nosedive since December when it was at 21 weeks of inventory. And now it is down just over 14 weeks of inventory, not really that far off from where we were last year. So what does that tell you? That if convo inventory in absolute numbers is up, but in relative numbers, it's largely the same, that should tell you that the velocity of condos has increased. And that really tells you a lot about those future single family home buyers, right? Many people will sell a condo and move on to a single family home. I think we are just waiting that market is going to become more competitive here in the next 30 days. Definitely watch it. I want to thank you so much for watching, liking, subscribing, all of those of you who have done that. If you'd like to work with us, and I want to tell you, the way we do business is a little bit different. We are very detail oriented in helping you make excellent real estate decisions. This is most likely the largest purchase you will ever make, and you want to work with someone who's really looking out for your best interests and also has the knowledge and expertise to be thorough. Anyhow, thanks so much for watching. Like, subscribe, hit the little notification bell. Questions and comments, as always, we love them. And if you'd love to get in touch with us, our contact information is in the description down below. Thanks so much. We will see you again real soon.